Hi, welcome to this video update, which is all about our Forex technical analysis and dealing with low volatility. Now, in 2019, we've had some of the lowest volatility in decades. Okay, I cannot remember it being lower in 30 years. Now, as technical traders, we want basically higher volatility, smooth trends that follow through. At the moment, you've got a lot of choppy sideways action, low volatility, whipsaw moves, breakouts that go your way and they suddenly come back and stall. It makes trading more challenging. However, if you approach low volatility in the right way, then you can make consistent profits. I just want to give some tips in relation to dealing with the markets as they are right now, so you can come out ahead with profits overall from your trading. So what we're going to do is go to a quick storyboard and review the points in more detail. All right, we're on the 10 points, which I think could help you deal with the low volatility in the markets generally at the moment. So let's start with point number one. Low volatility historically always changes to high. Low volatility never lasts. In my kind of trading career, it's normally about a month, maybe a maximum of 2 months, and it always ends in the explosion of high volatility. And that's just the way it is. And while there is low volatility at the moment, be alert for a change to high, just generally across the Forex markets. Now, in terms of point number two, it should be pretty obvious. The odds are against you trading low volatility. And what you find is, traders are very keen to trade. They want to do a trade, and what they'll do is they'll trade in low volatility, but they'll drop down to the lower time frames, let's say hour charts, 4 hour charts, even smaller. They'll go for smaller profit targets and use tighter stops. That's a guaranteed way to lose money, in my view. You should always be keying off the bigger levels, which I'll come to in a moment. You just won't have the odds on your side. You're trading noise and low volatility. And also, very often traders just get trapped in a pair that's just going nowhere. Their capital is tied up. If the pair is not very volatile, just avoid it. Okay. Now, in terms of being patient, best traders don't trade most of the time. It is. Never try and force profits from the markets and go for low odds trades. Okay. You can't lose any money if you don't have a trade. So you just pick the best opportunities. Now, in terms of we've had generally low volatility in the Forex markets, there have been pairs that have shown really good volatility. And they have tended to be in the crosses or in the more minor pairs. And I think most traders tend to focus just on a handful of major pairs. Well, the majors haven't really moved that much recently, whereas in some of the crosses and more minor pairs, you've seen fantastic movement, okay? So broaden out the number of pairs tracked. I would say do at least 30 a day if you've got a soundly based technical trading strategy. It's only take you a few seconds to look at each chart and decide what to do with it or not. You're not interested in the name of the pair either, in my view. You're interested in the chart formation. How does it look to you? And a lot of traders actually say to me, well, stick to the majors because it's the lowest pip spreads. That is a ridiculous argument, in my view, because the crosses are only a few pips more, and even the minors, okay, a little bit more again. But if you've got high volatility, your profit potential will easily compensate for the spread. The spread will be insignificant, okay? And if we look at our trading this year, many of the minor pairs have done well for us. One we've always been putting up on YouTube recently is GBP/NZD. It's been nice and volatile. Euro USD, no volatility at all. So look at more pairs and just pick out the best setups, okay? And you will find a good few, despite the fact that the Forex markets generally have exhibited low volatility, as we've just said. You'll get a good few each month, and that is more than enough to make you decent profits. Also, point number 5, just a personal reflection, look at other assets on the broker platform. And In terms of Forex brokers, they will normally have commodities, gold, crude oil, soft commodities. You can look to trade them as well. If you've got a soundly based technical trading system, it should be able to trade commodities as well as currencies. If I was to take my strategy, it actually started off as a commodity trading strategy. I just changed it to currencies, so it can do both. And you do get some great opportunities in the commodities. Yeah, gold gave us a really decent trade recently. And what's been the big bull market this year? It's been palladium. Many brokers have got that on their platform. That's had a massive trending move. So I think, yeah, you could use commodities as well as currencies as well. Point number 6, key off big levels outside of the noise. You never want to, like I say, drop down to the smaller time frames. You're just trading noise. Look for daily, weekly or monthly levels, the really big levels. And very often you'll get the 3 almost line up together. They're the really big levels that you can key off for breakouts or fake outs or whatever. And it will keep you outside of the noise. Okay. In terms of 7 and 8, just going to go to 2 of my favourite trade setups. In terms of, okay, let's say you have got low volatility in a pair, it's chopping sideways. Just wait for the range to break. I really like tight range breakouts. The volatility drops down really low, you get a nice sideways channel, then you get the change from low to high volatility as you break from the channel. It's an easy setup to understand. Obviously, when you're traveling sideways with low volatility, the supply and demand fundamentals are in balance. As soon as you get the breakout on high volatility, something has changed. You don't even need to know what it is. You can go with the breakout. Okay, those trades always, for me, offer great risk to reward. Okay, so yeah, if you see a tight range, establish the range, then look for a breakout. Just place a pending order. Point number 8: trade big spike deviations in pairs. It's one of our favourite ways of trading with regular viewers now. You just get a big price spike to the upside or downside. Look to fade it. And we do it with Bollinger Bands. And if you want to learn more about the way we do it, you can just check the playlist on our site. But if you get big price spikes, they always fade. Okay. And we normally look for a return to a mean price, which is a 20-day moving average. And you've had some big price spikes despite the low volatility generally in Forex markets. Several pairs have seen big moves to the upside or downside. Okay, and in terms of both setups 7 and 8, go to point 9. You can immediately liquidate price stalls. Okay, so let's say you have a tight range breakout. You come out the range on high volatility. It stalls. It comes back. Doesn't follow through. Just liquidate it. Get a small profit or a small loss. Same with big price spikes. If after your entry you don't follow through, you just liquidate. Probably get a small profit or a small loss. So you can be very proactive. If the trade runs for you, great. If it doesn't, get out and look for something else. Point number 10 is see the big picture of the 4 and 12. This is just my own view, but a lot of traders are obsessed with making money every month from the markets. Okay, that isn't possible. Any professional trader will say this. You're not going to be able to make profits every month, so see the big picture. And this is my experience. In 12 months of the year, I will normally make really great profits in 4 months. That's just a third of the year. And in the other months, it'll be okay profits or you'll be taking losses. Profits tend to be concentrated into just a few months of the year. In my sort of trading strategy, it's normally about 4 months of the year. So be patient. Okay, see the big picture. You don't need to make money every month. You don't need to be trading. Look at the long-term picture. Okay. And yeah, that will help you. Yeah, just be very patient, in my view. Now, in terms of, yes, you can trade the markets from a pure technical perspective. My own view is just put in simple sentiment analysis to help you filter technical setups. Sentiment that drives the chart, I often say it does. So if you know the sentiment, it'll give you an edge with your technical analysis. That's just a personal reflection. Yeah, you can trade purely technically, of course, if you wish. Now, low volatility, I think those tips hopefully will help. And yeah, it won't last for too much longer, in my view. Be alert because, like I said earlier, low volatility, when it ends, it normally ends in very high volatility. It's not a gradual increase. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.